Hi everyone. Now we're going to talk about our top 5 stocks to watch. So we're going to start off with Palantir. Palantir is a US tech company, so it's a data analytics firm, has some really big clients like the Pentagon in the US and also the NHS here in the UK. Now it is the best performing stock on the S&P 500 so far this year. It's up more than 70% and it has had a fantastic run. Now the reason why, usually you wouldn't necessarily want to buy a stock at the top, and it has reached record highs, but it does have some pretty compelling drivers as we move into the second half of the year. The first thing is we've got kind of a resurgence in tech stocks. The second thing, it has some really reliable customers, and it's feeding into that defense theme as well, alongside the AI theme and the tech theme. So they're real powerful drivers that we think could keep it at elevated levels for some time yet. It also hasn't really, it's got a much smaller market cap than some of its Magnificent Seven, the bigger tech companies, but it could end up going in that direction. So Palantir, definitely one to watch for the next 6 months in our view. Now, our second stock to watch for the second half of the year is Tesla. Now, Tesla is caught in this crosshairs between the fights between Elon Musk and Donald Trump. So Elon Musk had been very close to Donald Trump. They've had this big falling out, and that has, without a doubt, played out in the Tesla share price. Now, they've had another falling out over the budget bill, with Elon Musk criticizing it very openly, very publicly, trying to humiliate Donald Trump. Donald Trump obviously doesn't like this. He's a very reactionary president, and he's come right back at Elon Musk and actually said that part of the US debt problem is caused by people like Tesla because they get so many EV subsidies. So he's threatened to end those, and that is part of the budget bill. So he's saying that's why Elon Musk doesn't like the budget bill. And of course, that has a big impact on Tesla's share price. Now, it is converging around some key support levels, some key moving averages. But overall, the launch of the robo-taxi, so this has been long awaited. It launched at the end of June, and it really is seen to be a big revenue driver for Elon Musk and for Tesla generally. So that is something that the markets, will they be able to look through the political noise, look through potentially the end of subsidies to EVs, and actually to a future where revenue is generated much more from driverless technology, from robo-taxis, and for this, essentially it's a ride share program. So it's a completely new business bringing in these robo-taxis, which does make Tesla quite interesting. And I know a lot of investors out there, some big tech investors, are really seeing this as a new opportunity and a new era for Tesla. So that's why it's still on our one to watch for the second half of the year, even though, of course, you've got to be aware of the political risks. Now, moving closer to home and a smaller company, we go from these huge companies to a smaller one, Metals One. Now, you might not have heard of it. It is a UK small mining company. Now, it's not listed on the FTSE indices. It's actually AIM listed, but it could be included in the FTSE indices going forward. And that's why we have it as our one to watch. Now, as I said, it's a mining company. Mining companies have done really, really well in the FTSE 100 so far this year, with Fresnillo being the top performer in the UK stock market. So mining is a key theme, but we also have the fact that they've recently acquired some interests out in America, some uranium interests, and they have come good. So they have uranium in them. They could potentially start using that. Now, why is that important? Because nuclear is going to power the AI revolution in the US and across the world as well. So it's a really, really important mineral to have, and they have it. So they could really be there at the forefront of AI. We know that AI is the future, and that companies are really plowing lots into it, but it needs a lot of energy, and that's what Metals One can provide. So we think that Metals One could potentially be a FTSE contender for the future. Now, we've got another small UK company to keep an eye on in the second quarter. It's called the Smarter Web Company. Now, it's listed on the Aquis, which is a very small exchange, but it has seen its value absolutely surge. Now, the reason why, ostensibly, it's a digital marketing company, but it has done what some US companies have done, like MicroStrategy. It has a crypto treasury program going on. So it uses the money that it makes and it buys Bitcoin, and essentially that's where its wealth has come from. So it is a very volatile stock because we know crypto is very, very volatile. But as crypto moves towards those record highs again and remains back in focus, that really is causing a lot of interest in these crypto treasury companies, and the Smarter Web company, that is one. So it's the main one in the UK at the moment. It's really driving a lot of interest into the stock. As I said, not FTSE listed, but definitely a FTSE contender. In fact, at one point, when its market cap had risen so fast, it could have been a contender for the FTSE 250. Now, these crypto companies and crypto-based companies, they are really leading the S&P 500 higher as well. So Coinbase, which is the crypto exchange based over in the US, that has been the top performer in the last quarter on the S&P 500. MicroStrategy also up a lot and had been a top 10 performer in the US S&P 500 for Q2 as well. So crypto and crypto-linked companies are really one to watch too. Now, our number 5 is ASML. Now, ASML, is the Dutch company. It produces kind of lithography machines, which helps make the imprints on those tiny silicon chips, which are used to power the AI revolution. So NVIDIA is a massive customer, AMD is a big customer. Basically, any big chip producer uses ASML technology. Now, ASML, Dutch company, one of the highest valued companies in Europe. It's also on the Euro Stoxx 50 index. Now, it has been one of the top performers for the Euro Stoxx index in the past month, as that AI theme and as tech shares have really come back into focus, and we expect this to continue. We think that AI is going to be very resilient. It's going to be resilient to softening in US economic data. It's also going to be resilient to any kind of budgetary issue. That's because the sheer size of the balance sheets. The NVIDIA, for example, its cash pile, it makes it bulletproof to a lot of recession risk and a lot of other risks out there. NVIDIA is a key customer for ASML, so then it filters down. So that AI theme, how's it going to impact European companies? Well, look at ASML. That is a really key one. So they are our top 5 picks for the second half of this year. Thanks for joining, and we'll speak to you soon.